Hey guys, welcome back to the channel. In today's video, I want to go over the trades that I took today. As you can see, I'm finishing the day up a little over $1,700. So in terms of P&L, a solid day. Definitely dug myself out of that hole from the Facebook trade from last week. I had a handful of other good winners this week. I think I made about 1,000 to almost 1,500 over the past 3 days. So all in all, it's been a really, really good week. Now, I know I could have done some things better today, and one of the things I want to touch on as we go over the trades in this video is I want to talk about kind of my goals going forward as a trader, as I always look to grow, right? As we kind of figure out who we are as a trader, we can always look to grow and improve. And I want to just kind of touch on that in this video and kind of talk about, how I think I could improve over the next year or so. All right, so with that said, guys, if you're new here, I'm Tex, and I share my journey with trading and investing in the stock market. As always, guys, if you're enjoying the videos, please make sure you hit that like button. It really does help support the channel. And leave me a comment. I always love to hear from you guys, and I try to reply to each and every one of you. So with that said, let's go ahead and roll the intro and jump into the trades. All right, guys, so welcome back. There it is. You can see a total of 5 trades, finishing up $1,700 before fees and commissions, of course. And really, most of them you can see are pretty much just some base hits, right? Just kind of goes to show you that base hits really do add up when you get them. And then we have a really nice winner here on Amazon. And it's kind of funny today because I got distracted in the middle of one of my trades on Amazon because we had an AC tech coming out to the house to service our air conditioner. I'm sure, as you guys know, here in Texas, it's freaking hot right now. So I'm sitting in my room sweating right now, trying to make this video for you guys. So make sure you hit that like button. But anyways, just talking about the trades. I mean, like I said, a bunch of base hits with a really solid winner here on Amazon. And that's what it took to get us over 1,700 on the day. So just going for those base hits, guys, I mean, they really can add up. But the key, especially with any kind of trading, is to be very, very patient. You want to get the best entries possible. All right, so let's first of all jump into kind of what I was looking at this morning. Let's hop over to our charts here. And we got Apple up. Let's pull up the daily chart. So on Apple, this was one of my top watches because of the fact that we did see the, let me just turn on my, sorry guys, give me 1 second. Let me just turn on my drawing tools here. All right, so we're good to go. So what I especially liked on Apple was the fact that we had this doji kind of consolidation day yesterday, and this occurred after the break of trend, right? So we got the break of trend 2 days ago. We had this nice consolidation day yesterday. So I was thinking this morning, I was kind of talking to the guys that, hey, if we could, with the gap higher, if we could pull back into the prior day's high and see, catch a bid there and see if we couldn't continue this trend higher, we really have some room still to run, right? We could get up here to the 136 area, maybe even 137 and 138, right? So there was definitely overhead potential there for Apple, and I did like that. That was one of the top watches on the list. This one never really gave us a trigger to get in. Pretty much just sold off straight from the open there, and it never really gave us a good trigger to get into the trade. And so thankfully, I didn't really mess with that. As you can see, it did sell off here, a small little bounce, but just very kind of choppy on this bounce higher. Just did not like the price action at all on Apple. But thankfully, there were some pockets of other really good opportunities in the market. And one of the other stocks we were looking at was Tesla. And I'm sure everyone was looking at this one as well. Absolutely monster move here. So, Tesla made this move we were talking about. And one thing I will mention, if you've been watching my prior videos, is we've been looking at this trend line. I had it previously drawn like this. And the reason I did that is because that, we start at the all-time high, we anchor it here, and then we had this really nice look above and fail here, which pretty much confirmed the trend line. So I was talking about if we could break inside of this pocket here, we should visit that trend line, which was around 660, 650 and change. But I said it wasn't the cleanest because we did have that 50 MA sitting right in the middle of the pocket. Well, it sailed right through the 50 MA like it wasn't even there, and overnight it ended up trading even higher and got over trend. So this morning I realized, okay, maybe I should actually redraw this trend. So If you take this anchor point and move it to this candle instead, what you have here is opening over this trend, and we dipped into it, held it this morning, and then just ripped. And where did we go? So one of the things I want to talk about, let me make sure this is on the screen for you guys. There we go. That 695 level that we've talked about so many times, and the reason why it is important, right? It's the high from this day right here, and look at this massive volume from that day. So anytime you see on your daily chart a day that has a really big volume bar compared to all the other days around it, the high and the low from that day is extremely important, and it is no coincidence that that is right where we traded to. So I traded this on the long side, was looking to hopefully get that target, but the price action kind of took me out of the trade earlier than it should have, and that is really kind of one of the areas I want to talk about how I want to improve as a trader, as one of my primary goals kind of going forward from here and over the next year. Okay, so this is what the macro picture looked like, right? At first, I thought we were still under trend after I had redrawn it like this, but then once I zoomed out on the chart, I realized, oh, wait a minute, guys, I posted in the chat room, we're actually over trend, right? So instead of, being cautious about taking longs, I was all of a sudden very interested in a long. So when we go to the 5-minute chart, I am extremely pleased with my entry on this trade. And you know what? I totally skipped the first trade of the day that I took, which is on Netflix, but we'll go over that in just a second since we're already talking about Tesla here. So let me bring my order box over here. So here's Netflix. We'll look at that in a minute. But here is Tesla, right? So I got in my first contract at 9:50 in the morning, okay? So where that is on the pullback of this 5-minute candle right here. And the reason that I bought that is because you can see that that was the break of the initial morning high. Okay, so we broke the initial morning high on this 5-minute candle. The next 5-minute candle dips, and where does it dip to? It dips into that prior morning high. It also dipped into the 5-minute 9 EMA, and it also retraced 50% of the prior candle. So there's like 3 confluence factors right there, plus given the fact that we opened up over this super significant trend, that gave me a lot of confidence to buy that dip as it came into that level. So you can see I bought one contract there at $11.20, and then what, about 20 seconds later or something like that, I bought another contract at $10.75. So that was right at the bottom of that wick, basically. So I bought halfway down and bought the second contract here, and was in solid. And then we pulled back up, and the candle closed up near the high. This looked really good. So what I really wanted to see for this to, for me to kind of take profits, was to see this next 5-minute candle here, see a big expansion of range. So I was hoping that we could basically get another big 5-minute candle like this one here, at which point I was going to plan on selling near the close of the candle. So you'll notice that on any strong trending day, if you look at your 5-minute chart on like a lot of stocks, AMD was another one today. If you look at your 5-minute chart on a strong trending day, you'll notice that there's several 5-minute candles that they'll rip really high and they'll close near the high of that candle, right? So this was a great example of the potential of that actually happening. After we got this pullback on this candle, I was thinking that if we could get another 5-minute candle like this one, where we traded up really high and then it pulls back a little bit off the high and closes near the high, I would look to sell one contract, maybe 10 or 15 seconds before that candle actually closes, and then we would have been able to milk almost that entire 5-minute candle. Well, unfortunately, this 5-minute candle really didn't go very far, and you could kind of see it in the price action. It was very volatile, but you could kind of see it in the price action how it was really struggling, right? It wasn't, I hate to say that it was, kind of tricky, because it, in a sense, that really never gave me a reason to get out, other than the fact that, we did get out here at the close of this 5-minute candle. It just didn't give us the big expansion and range that I was really looking for. So I sold one contract for a very small gain at $12, and then once we were really failed to go any higher after that, I sold the last contract at $12.75. So I only made $280 on that, which it's a solid base hit. But I was looking for so much more. Again, I was looking for that 695 level. And in hindsight, it did nothing but ride the 5-minute 9 EMA all the way up to 695. So it really never gave me a reason to get out of the trade. And that's why I'm kind of more disappointed in this trade. Even though I walked away with a solid base hit on it, it had so much more potential than this. And in hindsight, what I should have done is, sure, okay, go ahead and sell one contract here at the close of this 5-minute candle. We didn't get the expansion of range we were looking for, but we need to go ahead and take some profit, remove some risk, and then that would leave me with one contract on. And then I could have set a stop at break even on that last contract. And when I say break even, not break even for that contract, but break even for the trade overall, because bearing in mind, if I had sold one contract here and locked in a profit on that one contract, I would have had a little bit of breathing room to let the last contract ride until the trade overall was break even. So on this pullback here, I probably would have went a little bit red on that last contract, if not right to the stop, if I was going, for a break even stop on that particular contract. But if I went for break even on the trade overall, I would have never been stopped out. And there was like $1,000 on this move here with that one contract. So I left $1,000 on the table by not letting that one contract ride. So kind of getting into my goals going forward as a trader and how I really want to improve as a trader. I want to get to where I can really milk these trades. But as you guys know, I am a scalper, right? For me and my personality type, I feel the most comfortable when I can get in and out of a trade very quickly, because it limits my time exposure to the market. And a big driver of that is fear, right? Because we have the fear of giving up profits. When we go green on a trade, we want to take that before the market reverses on us, right? Most of the time, though, the market's not just going to reverse on a dime. It's going to give you plenty of opportunities and plenty of signals that a reversal is pending. But as we know with options, it is kind of important to be a little ahead of the curve, because if you wait too late, you're going to give so much profit back from those premiums really, kind of dropping on you, especially toward the end of the week, which we are on Thursday. So it's a little tricky situation, but I do want to get to where I can really milk these trades. And because I'm a scalper, how can I do that? So basically what I want to start doing is treating the first 80% of my position as a scalp, right? So go ahead and take a trade as I normally would. Be patient with the entries, which I think I'm doing pretty well at. I'm for the most part, except for the Facebook trade last week that I got smoked on because I got in too early and with too much size. For the most part, I'm usually pretty patient about my entries. So if you can get a good entry, if you're patient to get that good entry, and me being a scalper, go ahead and just trade that first 80% of my position the same way that I do now, right? Go for that first move and then just take 80% off. Instead of taking the whole thing off, take 80% off. And then just set a stop at break even, or maybe just a little bit below break even on that last 20% of your position, even if it's just one contract, right? Just set a stop right around break even, so that, just enough that you can let the trade really work and you have the potential to catch so much more, right? So that's really what I want to work on going forward. I want to get to the point where I can eventually just work around a core position where you take profits and then you add back in, especially when you have a beautiful trending chart like this. It's something that I really am going to strive to do as a trader. And it's kind of getting to definitely a more professional level of trading. It's not something that I would recommend doing as a beginning trader, because you can really screw up your cost average when you start talking about adding to trades and working around a core position. But the first step of that, the first step to get to that level is to, like I said, take 80% of my profit on that first initial move where I'm normally taking everything off, and then just let that last 20% ride. Don't worry about adding, just let that last 20% ride until you get your profit target. In this case, I had so much more on the table. But eventually, like I said, I want to get to the point where I can just keep adding and selling and work around a core position. So that's the direction I want to go. But, I know it's going to take some time and a lot of work to get there. So this is the trade on Tesla. I actually took 2 trades on Tesla. We'll go over the second one in just a second. But this is the trade I took on Tesla. This was the second trade I took on the day. So we kind of skipped over Netflix. So let's go jump over to the chart here for Netflix and just see why we were looking at that one. So Netflix, I felt like had the best potential on the day because of this massive overhead gap right here, right? So this is an unfilled gap after their last earnings. Netflix had this huge gap down, and it has not been able to move inside of that gap. Well, it's finally starting to perk back up. And what I really love about this is all your moving averages here. You got the 50, the 200, the 20. They were all previously all tangled up right here inside of this gap, which was just super messy. You don't want to see a bunch of moving averages creating overhead supply in the middle of a gap. When you have a nice clean gap to work with here, this is going to act like a magnet, right? The stock is going to want to fill this gap eventually. And it looks like it's getting really, really close. So today I had it on watch because we were opening up right underneath of that level. So I thought that if we could squeeze up over this gap, it might be a trigger for shorts, kind of their line in the sand, to really see Netflix just squeeze the holy hell. And I wanted to make sure I was in on that trade. So if we squeeze through that, I was going to take it right off of the open, but I was going to keep my stop super tight. If the momentum died and we even acted like we were going to fall back underneath that level, I was going to bail on it, because Apple did the same thing this week. Go take a look at Apple's chart real quick. And I took a loss on this, right? On this day here, we opened up right underneath the trend. We squeezed over it. I got in, and then we rolled over and fell right back below trend. And I held the trade too long, and I ended up taking a loss on that. And so I knew that, obviously there was a chance that the same thing would happen on Netflix. And thankfully, one of the guys in the room, Matthew, took the trade with me, and he, he did the same thing and managed risk really well, because we knew that it had a chance to go, but if it also had a chance that it might fail, and that's exactly what it did. So go over here, take a look at your, let's go to the 1 minute chart, because I literally took this trade. You can see my entry right off the open, which is not super common for me. I try not to take a trade in that first minute. I like to wait till at least the second minute. And but we can see that first 1 minute candle, it opened right here underneath the trigger. So here's the bottom of the gap. And not only that, but this is also the prior month's high. So that's a huge trigger point. So we opened, we had this quick little dip, and then we just ripped. So as we ripped up through that level, you can see that I bought 2 contracts there at 440. And then we ripped right here. It may be hard to see on the screen, but right there is the second resistance level from the pivot point study, the R2 level. And that R2 level is always a huge level. It may be the most important level from the pivot point study. It's always a key reversal point. So we obviously had a pretty big gap higher on Netflix. That's why the R2 was literally right overhead. So as we pushed into the R2, you can see I sold 1 contract at 495. So I sold 1 out of 3, and I was going to really try to be patient with those last 2 contracts, see if we could pull back, hold support, and if we confirmed, I would add back in and look for a big move higher. Well, we did not do that. We pulled, obviously we pulled down here, and as we were coming back down into that level, the tape, everything just looked really bad on it. And so I ended up bailing on the last 2 at 475 and 450, a little bit better than my cost average. So all said and done, I only walked away with $100 on that trade. And really, I kind of consider it more of a scratch trade, because there was obviously a lot more potential on that trade. So the fact I was at least able to get out of it for, not a loss, that's a huge positive. So that was Netflix. Unfortunately, that one did not pan out, but it is, like I said, it is looking pretty good. I love how it's still holding up around this level. I really just kind of want to focus on the day trades I took today in this video, but just very quickly, I did put on a swing trade on this. I went long 1 of the 530 calls here for next week's expiration, and I went short 2 of the 550 calls. So we basically have a call vertical here with an extra naked contract. And the benefit of doing that is that it was a lot cheaper to put the trade on like this versus just doing, long 1, short 1 for a classic vertical spread, because that vertical spread was trading for about $240, I think, and I was able to put this call ratio spread on for about $109. So far cheaper to put this on, And obviously going for the gap fill, right? Here's the top of the gap. So if Netflix can make this move into next week and work its way into our spread here, it should be nice and profitable as long as it doesn't go through our entire spread. And that's the negative side, because we are short a naked contract out here on the other side of the spread. So that was Netflix. That one just didn't really pan out. And we went over Tesla. So the next trade is Amazon. So I actually traded Amazon a few times today. So let's go over and take a look at Amazon's charts. So Amazon is quickly becoming my favorite, really, for scalping. So just a quick look at the daily chart. The reason that I was looking at Amazon is because we were opening up over this 34.96 level that we've been flirting with for a little bit, and we're just a stone's throw away from all-time high. So it kind of felt like it wanted to make just a quick run up to all-time high. I thought if we could get this dip into 34.96 and hold, we might be able to make a run up to all-time high. But obviously you can see in hindsight, it really fell apart here, finding support finally at low of day there around 34.34. So the first trade I took was at 11.50, and let's go take a look at our chart here. So that trade is actually right here. And so I'm actually very proud again of this entry, but I'm not so proud of this exit. So again, kind of getting to the point of where I need to improve. I'm doing really good with being patient with my entries, but I still have a lot of work to do when it comes to being patient with my exits. So I saw that we had this just massive confluence of support down here, right? So kind of going over what we're looking at, we have the prior month's high sitting right there. We have the prior month's open sitting right there. We have the, what support level? We have the first support level from the pivot point study sitting right there. And then we have the prior day's low. So we have a confluence of 4 support levels sitting right there around 34.84 area. So I noticed that Amazon had this nice little sell-off. It came down into these levels. It initially started to bounce here, came up into the 5-minute 9 EMA, came back down into a double bottom, but it just sat there, right? And these are 5-minute candles. So it stayed down here for a long time, right? It really did not go anywhere. So this was a little bit of a battle between buyers and sellers right here, because you have people buying this dip, but you also have sellers really continuing to sell it down. And obviously, you know, this was a big level, but I just did not want to be shorting something like this until it got underneath of this level. And unfortunately, I probably should have taken the short because it really paid out huge for anyone who did take that. But the trade that I took was when I noticed this candle here. We broke all those support levels, and then we got bought back up, and we left behind this little hammer candle. So I got in on this trade on this candle right here. No, I'm sorry. I got in on this trade right here on the open of this candle because I loved how this candle and this candle confirmed support. It tried to break. It didn't. It rounded back up. So I figured this looked primed for a reversal, probably to the VWAP, but at least to 34.96. So I literally nailed it right on that candle. You can see I bought at 11.50 in 9 seconds. So this candle opened, it dipped, it came back up to the open of the candle, and I pulled the trigger. I only bought one contract. I bought the 34.80 calls, which is just in the money, kind of right at the money, which is usually what you want to go for. You also want to look at volume though, especially on a stock like Amazon, because the spreads can be brutal. So if you're trading a strike that just doesn't have a lot of volume, it can be very difficult. So that particular strike had pretty good spreads. So I got filled on that at 22.05, and then I sold about 3 minutes and 38 seconds later. So I didn't even wait for this 5-minute candle to close. I was supposed to at least sell at the close of this 5-minute candle. And in hindsight, I really should have waited for my ideal target up here, because I probably left about $300 at least on the table on this particular trade. So this trade, great entry, very happy with that. Disappointed with the exit. I was not patient enough with the exit. It hit my profit target, and I ended up making on that trade, let me see, that trade on Amazon, I ended up making, is it this one? Yeah, 34.80. Yeah, it's this one. That trade I ended up making $120. So really not enough for Amazon, not enough for the risk that Amazon involves. So definitely disappointed in that, but another base hit in the books. All right, so that was the first trade that I took on Amazon. And then I took another trade on Tesla, and we'll go over that in a minute, but let's just finish up with Amazon since we are here. So the next trade I took on Amazon, this was right just before the AC guys got to the house. So wouldn't you know, at 121, I bought 3450 call. So at 121, that was 121. Was that? It was right here. It was right here. So what I was looking at here is obviously we were getting very extended. We had just broken below this pivot point here. And this one, I actually was not quite as patient with the entry. I was going to be risking off of the next pivot point level here. And as we sold off here, I got in once we started to bounce on this candle here. I hopped in with two contracts. You can see I got filled at 2190 and 2170. So I got filled there and was thinking, all right, this is actually looking pretty good. If we go and look at the 15-minute as well, at 121, that is about right here. Okay, so obviously big extension on your 15-minute. Was thinking that, okay, I'll be able to risk off of this level here. I'll add two more here if we make the move to there. Otherwise, if we get the bounce up into the 90 EMA, that's what I'm looking for. Well, going back to our 5-minute chart, I was right here. So we started to bounce, and then the doorbell rings and the AC tech guys show up. So I pretty much decide, all right, this is Amazon. I cannot walk away from this. I have to take this off. So, so I sold one here at 23, and then I meant to sell the second one, and I actually ended up buying another one at 23.10. And then I was like, oh shoot. Okay. So then I closed the two contracts at 22.95. So that was the 3450 calls, and that one, 3450 calls. So that one is here. This is part of the larger trade. So the first trade I took was on the 3450 calls. How much did I make on those? So I made $110 there and $110 there. So another base hit, basically. So then I go let the AC guys in, they do their thing, and I think, man, I just missed a huge trade on Amazon. I just know it's going to bounce really big from there. And then I come back, and it's like right here. I see Amazon, and I'm like, wow, I'm glad I sold, because I literally sold just before it dropped again. And then it came down to my risk level from this trade. And then all of a sudden now I'm sitting in a position where now I have an even higher probability trade, because we have this third support level from the pivot point study. We have the 9 EMA from the daily chart, and then we have that big 34.34 level. So from the daily chart, that 34.34 level is from this swing high right here, where we had 2 days of resistance there. We had this look above and fail right there. And then we broke above it here, came back and held it there. So 34.34 I had marked on the daily chart as a pretty big level. So that combined with this confluence of other support here, the 9 EMA and that third level from the pivot point study, gave me a lot of confidence to go ahead and take one more stab at this trade. So I filled, let's see, okay, so here we go at 139, which is right here on this candle, literally kind of right at the close of this candle, right at that support level. I bought two contracts at $17.70. So my risk on this trade is here, 34.34. Okay, so I'm going to give it down to 34.34, and I'm working right here in this zone. So it actually formed a little bit of a doji candle here for our next 5-minute candle. So I'm thinking, all right, it's probably not going to get down to there. We look good for the reversal. I'm just going to ride with what I have. Otherwise, if we drop to my risk level, I'll add 2 more contracts with a hard stop underneath of it. So I thought we were going to reverse after this candle here, but the next one opened and we just dropped, right? We dropped pretty hard right through the 9 and came right into the 34.34. So I put an order out well below the market, and I got filled at 14.85 on another 2 contracts. So dramatically improved my cost average, right? First entry on 2 at 17.70, second entry on 2 at 14.85, and that was at 149. So that was literally right here. All right. So now I'm in max size, and we're right at my risk level, and I'm looking for at least a bounce into the 9 EMA. And then really what I was hoping to do was, again, to take 80% off and then try to let one contract run. Because if we go and look at our longer time frame charts, right, we go to the 15-minute chart, here is the bounce, right? And look how extended from the 9 EMA we were, right? So super high probability that we would get a bounce up into the 9 EMA, at least on the 5 and the 15-minute chart. You can even go and look at your hourly chart, right? And just, big extension here on the hourly chart as well. So all the time frames were really lining up for the trade. And, I felt really good about it. And I did fine, except for the fact that I looked at my P&L. So I tried to keep my P&L hidden when I'm trading, but I just happened to look at it and I saw that I was up like really huge. And so I took off 2 here near my first cost average at 1780. I took off another one at 1790 when it was just really struggling to move any higher. And then I threw an order out at 1920 to cover the last contract, just in case we got kind of a quick spike up. And we did about a minute later, and I got that one contract filled at 1920. So in hindsight, I think what I should have done is I should have definitely been a lot more patient with this and probably thrown an order out, say around maybe 1850 to 19 for 3 of the 4 contracts, and then just set a stop at break even on that last contract. And if we look at this, I would have been stopped out. I definitely would have been stopped out on that last contract. And when I looked at the premiums at the time, I probably left a couple of $100 per contract on the table, because I think the premiums got up to about 21 or so, 21 and change. And my best exit was 1920. So I had about, what is that? I had about a 1580, 16 something average, I think. I think it's right about 16. I had about a 16 average because my first entry here was 1770 with 2 contracts, and my second entry was 1485. So I would have had roughly about a 16 or so average. And, the highest the premiums got on the bounce was like 21 and change. So even if I had sold everything at 19, I would have made a lot more money. So as you can see, this is kind of what I'm talking about really trying to milk the trade and just get more out of it. And this was a good example of where I would have been stopped out on that last runner, but it had so much more potential if it could have really bounced more, and it just didn't really get it. So that was all the trades on Amazon. And then the last trade I took on Tesla was just a really quick scalp trade. Let's just go to the chart and take a look at this. So this was after Tesla made this big move right here, and I scalped this pullback right here because you can see that as we broke down below the 5-minute 9 EMA, we came into all this prior support here. And this is right where I was thinking we would see at least some type of a quick bounce, but I was not greedy with it at all. I left a bunch on the table there. So my entry on that was I bought 3 contracts at 1238, which was 1238 was right about here, probably towards the bottom of this candle. Yeah, it was as we were coming into that support level. It's hard to see on the 5-minute chart, but that's right about where I got in there. And then I sold one at 14. So I got filled at 1335 on those 3 contracts. I sold one at 1420. I sold another one at 1420. Oh no, wait a minute. I do remember this. I accidentally bought one. I bought 2 more at 1420. That was what I did. So I bought 3 at 1335. I sold one at 1420. I meant to sell another one at 1420, but I fat fingered and bought 2 at 1420. And then I was like, oh crap. So I sold all 4 at 1415. So did I lose money on that? No, I guess I still made money on that, but I definitely fat fingered that, and that was definitely a bonehead mistake on my part. But I still brought in on that particular trade, that second trade on Tesla, I guess $235. Yeah, $235 on that one. So all said and done with, it added up to $1,700, which I'm extremely happy about, obviously. But again, just talking about going forward, as I look to progress as a trader, I really want to work on my patience when it comes to staying in trades and really milking them for all they're worth. And I'm really seeing a lot of potential in these 5-minute charts as far as kind of keeping myself in the trade and using both price and time to kind of gauge my exits out of these trades. So I will make more videos about this as I kind of make progress in that area. But I wanted to just kind of share today's trades and results with you because obviously it's a really good day all around. And yeah, so with that said, guys, I'm going to wrap it up here. I always appreciate you watching the video. As I said, hope you guys had a great day trading. If you guys are interested in hanging out with me in my chat room, the link is in the description below. There's just a handful of us that kind of hang out there and share trade ideas and stuff like that. And we'll see, kind of see the direction that goes over time. But as always, guys, yeah, thanks again for watching. Take care, and we will see you in the next video.